Good morning, everybody. It's Wednesday, July 24th, 5:39 a.m. Central Time. Grain markets are mixed this morning. December corn futures unchanged at 417 and a quarter. November soybeans down 4 3/4 at 1070 and 3/4. December Chicago wheat up a half cent at 568 and a quarter. December Kansas City wheat down 3 1/4 at 580. December spring wheat down 3 1/4 at 629 and 3/4. Let's start off with the weather.
Excessive heat and rapid onset drought are likely to impact parts of the Western Corn Belt and U.S. plains. The National Weather Service has hazard outlooks in place for areas of western Nebraska, South Dakota, and North Dakota with regard to drought. Excessive heat is likely to impact a much larger portion of the central and western U.S. Rainfall during the next 5 days will be scarce throughout the U.S. Corn Belt. Rains are slated to return during the 5 to 10 day period, but will be confined to central and eastern areas. The far western Corn Belt and U.S. plains will remain dry.
Rapid onset drought, absolutely terrifying. The area in which the government says will be impacted by this rapid onset drought is not huge, and it's outside of primetime U.S. corn and soybean country. You're talking western Nebraska, western South Dakota, southwest North Dakota, Montana. It's into spring wheat country a little bit. I think the risk is actually, excuse me, a little bit larger than this map would indicate if you guys are watching. When you look at the first off the rainfall maps, there's really nothing for the entire U.S. plains, really not much for the western Corn Belt. Eastern Iowa is going to catch some rain, but southern Minnesota is going to be scattered. So there's a big chunk of real estate here throughout the plains that's going to be hot and dry. You look at the temperature maps, and the heat is going to be very much widespread. This 3 to 8 day map, okay, the heat starts to come in, and you look at the 10 to 15, you're talking, what, 2/3 of U.S. corn and soybean country probably that are going to run 10 degrees above normal on average. So there's absolutely some risk here. What crops are at risk? The market would be of the opinion, right or wrong, that it's probably too late to hurt the corn crop real bad at this point when you get into, the first or second week of August. The soybean crop, yeah, that's maybe it could be a problem. As I mentioned in the past, I just don't see soybeans and August weather correlate the way that corn and, say, June or July weather correlate. You just don't see those movements based on every little change in the weather forecast. Let me know what you guys think. If you're in these areas where you're going to see the heat, what's it going to mean for your crops, whether it's corn, soybeans, spring wheat? Drop us some stuff in YouTube here.
The annual Wheat Quality Council Spring Wheat and Durum Tour kicked off yesterday. Scouts project that spring wheat in southern and east central North Dakota will produce the best yields since the tour began back in 1994. Crop yields are slated to reach 52.5 bushels per acre, up from last year's first day estimate of 48.1 bushels per acre. In some fields, scouts reported fusarium and head blight. On Monday, the USDA rated 77% of the total U.S. spring wheat crop as good to excellent, steady with the previous week. Scouts will tour northern North Dakota today, and the final yield estimate for the tour will be released tomorrow.
Basically, what the tour told us is that crop potential is fantastic, which very much jives with USDA's crop ratings, which have been excellent all year. 77% good to excellent in spring wheat is about as good as it gets. And the tour would tell us that that's pretty much the case. It's going to be a darn good crop. They've got more to do, but I would expect that we see more good yield potential. That being said, this heat and rapid onset drought, some of that is in spring wheat country. Some people have told me it's maybe too late for that to be a big deal, and that it could actually be helpful with regard to crop potential. Let me know what you guys think.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
Yesterday, I did a grain marketing review, as I do every 3 weeks or so. Talked about my final 2023 corn and soybean averages. What did I advise? How did I end up? What did I do good? What did I do bad? Maybe you messed up your grain marketing last year, and maybe you need a more simple and easy approach. This is about as simple and easy as it gets. Basically, I advise cash grain sales. I mark them to wherever they were priced, and I track everything by percentage and weighted averages. If you can't follow this, you can't follow anything. I don't advise anything super fancy when it comes to futures or options. I think I advised one options trade last year. I haven't done anything this year. No accumulators, nothing like that. This is just straight cash grain marketing. It's super simple. Maybe you should simplify. To see this video, you can pay the $50 and sign up for a month, and I'll send you over this morning's email. If you don't like it, cancel it. Very few people ever cancel it, but you should check it out. go to standardgrain.com. Sign up this morning. I forwarded you a copy of this morning's email, which includes that video along with all of my cash grain marketing recommendations. You'll get our premium videos every single business day. It's a $50 per month subscription. Cancel at any time. This is the best way to support the podcast. It's the best way to support the YouTube channel. We don't make any money off the public stuff here. Our premium subs float the boat for us. If you're a premium sub, we love you to death. If you are not, give that deal a shot.
Canola could play a big role in the future of renewable fuels here in the U.S. Several agricultural corporations have been increasing their investments in canola production and crushing. Canola has about twice as much oil as soybeans and promotes soil health, making it a more environmentally friendly feedstock. The market for renewable fuels is expected to grow in the coming years as many countries reduce their dependence on fossil fuels. Incentives for renewable fuels, however, could decline if Donald Trump wins the presidency in November. The combined U.S. and Canadian market for renewable fuel feedstocks is slated to be worth more than $20 billion next year, a 233% increase from 2019.
Canola in the United States is not very big. 2024 plantings, according to the June 28th report, were 2.6 million, and we planted 91.5 million acres of corn, just for context, to put it in perspective. They did this experiment, I guess we'll call it. It was Chevron, Bunge, and Corteva. They wrapped up their first season, this is from the article, of their joint program that encouraged Tennessee and Kentucky farmers to grow a winter wheat crop of canola before soybeans or cotton. It went so well that they plan to expand acreage sevenfold in the next season, starting this fall, and expand into 3 additional states, Illinois, Indiana, and Missouri. The political stuff was also mentioned here, and I think they did a good kind of summary of what could happen. They said canola is basically on track to continue growing unless Donald Trump wins November's U.S. presidential election and looks to water down incentives to decarbonize the sector, which some see as a distinct possibility. On the other side, some critics of Biden's administration had worried he'd champion electric vehicles at the expense of biofuel growth. So you've got political risk here, I guess I'd call it, when it comes to biofuels, with both parties, with Republicans and Democrats, for different for different reasons. There's just a lot going on in the biofuel space right now, and a lot of uncertainty. I know that the 45Z guidance is really the big thing with corn and SAF. I think that's going to be the deal. That's going to be the future when it comes to fueling airplanes in the United States and globally. Airplanes can't run on batteries. We're going to have to go to SAF. But a lot of this other stuff is very much in flux.
USDA reported a flash sale of corn on Tuesday. U.S. exporters sold 8 million bushels of corn to unknown destinations for delivery during the next marketing year. Yesterday's sale comes on the heels of Friday's flash sale of corn, which was for 5 million bushels for delivery to Mexico.
Some people believe this was China. This was China coming in and buying new crop corn, which would be a positive. The book of new crop corn sales is very poor to this point. This is like we're the fourth worst of the last 10 years and kind of bottom of the barrel here. The 2 years in which China made really aggressive forward purchases of U.S. new crop corn were 2020 is when it started, and 2021. In 2020, that was following COVID. It was following the trade deal. It was about this time of year that China came in and started buying corn really aggressively for new crop delivery out of the United States. Could that happen again this year? I really don't know. I think most people are pessimistic about Chinese demand prospects, especially when it comes to the United States. China's going to lean more on Brazil, but there's potential. It's possible. U.S. corn's competitive on the export market, so China wanted to buy some at these discounted levels. That would not be shocking.
Sovacon raised its estimate for Russia's grain production yesterday. The Russian agricultural consultancy is projecting the crop to reach 130.5 million metric tons, up from its previous estimate of 127.4 million metric tons. The consultancy also increased its outlook for Russia's 2024 wheat crop to 84.2 million metric tons, up slightly from its previous projection of 84.1 million metric tons. Russian wheat estimates have risen following the large cuts that were made back in May and June. Damage from drought and frost was not as bad as anticipated. USDA most recently pegged the crop at 83 million metric tons, down from an earlier estimate of 88 million metric tons.
Disaster averted in Russia. So we had this big crop scare event in May, and wheat futures rallied sharply because we thought the Russian crop was at risk. As it turns out, there was some drought damage and some frost damage, but it wasn't as bad as what the private groups or some of the people over there had said. So the crop's going to fall somewhere in the mid 80s, not quite as big as it could have been, but not a disaster either. And for that reason, wheat futures have fallen apart since that crop scare event.
U.S. home deals were canceled at a record pace in June. Almost 56,000 home purchases were canceled, the highest level on record for the month. Cancellations were equal to about 15% of all homes that went under contract during the month, according to Redfin. Buyers are backing out due to record high home prices and interest rates near 7%. To compensate, sellers are cutting prices on homes. About 20% of the homes listed in June saw price reductions, a record for the month, and up about 14% compared to last year.
It appears certainly as if housing is softening. I'm going to hit this from a local level. This is Nick Gurley on Twitter. So I live just outside of Nashville. Nashville just set a record for price cuts with 35.2% of sellers cutting the price in June of 2024. That's the highest level for June going back 7 years and well above the long-term average of 24%, suggesting that Nashville's housing market has entered a downturn. Don't be surprised if prices drop there in the second half of the year. So I have seen this. And what's going on locally, at least Nashville has been one of the hottest markets in the country for residential real estate. What's going on locally is that sellers are posting their houses for sale at prices that would have worked in 2021. And they think they're going to get what their house was worth in 2021 when rates were still lowish. And now rates are 7% and they're not getting it. So yeah, price cuts all over the place. Nothing's selling at asking price anymore. There's no more bidding wars like there was 3 years ago. This is a mean reversion. I don't think the real estate market's going to collapse. I think it's a mean reversion. And I think real estate overall probably stays strong. There's a lot of demand. There's not enough supply. It's just we're mean reverting because we got way too hot. What did cattle do yesterday?
They were higher. Feeders were an average of $1.72 higher. Live cattle were up an average of $1.21 higher. Box beef continued its downward trend yesterday. Choice ended the day at $313.21. That was down 23 cents. And select ended the day at $296.66. That was down $1.67.
U.S. dollars about flat this morning. Stocks are off. The S&P's down 41. The Dow's down 180. Bonds are about flat. Gold's up $8. Crude oil is up 72 cents. And the September WTI 77.69. Have a great day, guys. We'll talk to you on Thursday.